Okay, yeah, good.
Good. So good evening, everyone. Welcome to this session by the Institute of Chartered Accountants, the Luxembourg chapter. Just to let people know, there are more than 100 members in Luxembourg itself. So this is a chapter we have not really leveraged enough. So now we would like to do monthly events where we can bring in some knowledge quotient to it. We have been meeting for the last 6 months or so on a monthly basis, but now it will be a little more regular, a little more serious, perhaps, right? And we thought we'd kick off with this filing taxes in Luxembourg because that is something which touches all of us, something which is useful for all of us. And a big thanks to Patrick and team for being here with us today and taking us through it. So without much further ado, over to you, Patrick. Thank
Okay, perfect. Thank you.
you. Sorry.
So welcome everybody from my side for this webinar. So there are some of you here in the room, the others in front of their computers. Maybe just to check if everything is working. Yes, let me present myself very quickly. My name is Patrick Malge. I am one of the founders of taxx.lu, which is a website that is online since 2018 and that allows everyone to do their taxes in the most easiest way. I brought with me my colleague Justine, who will also intervene on some topics during the webinar. Maybe for information, at the registration, you have asked quite a lot of questions, so we tried to get them all together and to give most of the answers here during the webinar. Some are more specific, so what we have planned to do is send to everyone next week kind of an FAQ. So basically, with all the questions you have sent us, we will send you the answers to those questions and share them with you. Because we are quite a lot of people, we have like almost 400 people registered. There won't be a Q&A at the end of the webinar because we could be here until next Monday, most probably, with all the questions about taxation. If you have any questions after the webinar, of course, you will see our email address during the webinar. So you can just contact my team. It's help@taxx.lu. Or you just try to create an account on taxx, start your tax filing, and then if you have any questions, you can reach out to my team on taxx. We will see it at the end of the webinar. There's a chat where we have a few tax experts working in our team that can answer all your questions. So I have some bad news. I'm not a tax expert, but at the same time, it's maybe also good news because being a tax expert very often means that it's very technical and maybe also a little bit more boring than not being a tax expert. So I will try to give you as much information as possible without going too much into details. And that's basically the goal of today's webinar. So what we will see is more basic overview about how taxation works in Luxembourg. Then a few specificities for expats. We will talk about the possibilities of saving taxes in Luxembourg because there are some possibilities. And we will also go very fast over the different possibilities of how to file your tax return here in Luxembourg. So taxation in Luxembourg, it's probably the same than in other countries, but every country is a little bit more different. So I just wanted to give some base information. So what happens for most of us when we are working in Luxembourg, we are getting a salary, we're getting a monthly salary, and this salary is the employer, your employer is withholding tax on that salary. So you don't have to worry about it every month. You will get your net salary on your bank account and your employer is doing the rest for you. On the other hand, at the end of the year or the start of the new year, you can do, or you have to do, we'll see it in a few minutes, a tax return, asking for some regularization. Regularization means here, in some cases, you will owe taxes to the Luxembourg state. In other cases, you can claim some taxes back. So maybe to start with, the tax return, for whom is it mandatory? There are different criteria. This list is not exhaustive, but it gives some of the most common scenarios. So for example, if you have a taxable income above 100K, then you have to do a tax return in Luxembourg. If you are married and if you have two incomes, so the two spouses are working and the total salary, the taxable income is more than 36K, then you also have to do a tax return. It's the same if you have simultaneously two employment contracts. For example, if you would work 50% for one company and 50% of your time for another company, then and your total taxable income is above 36K, then tax return is also mandatory. And it's the same if you have any income that is not taxed at source. So, for example, some rental income in Luxembourg or abroad, some investment income over 1,500 euros, then in that case, you also have to do a tax return on a mandatory base here in Luxembourg. If you're not sure about your situation, just contact my team on help@taxx.lu and we can give you more information about this. So even if a tax return would not be mandatory in your situation, it could make sense to file one. You have to know that almost half of the taxpayers in Luxembourg are not filing a tax return in Luxembourg because for them it's not mandatory. But if they don't do any, they cannot ask for any refund of taxes. At the end of the webinar, or in the third part, we are speaking a little bit more about the possible deductions. And most of those deductions, at least for insurances, quite every one of us have them. So doing a tax return can allow you to ask to get some money back. So even if it's not mandatory in your situation, do a simulation to see if you could claim some taxes back, because Luxembourg tax administration is not coming to you to tell you that you will get some money back. So you have to claim it. So what does the amount of taxes you have to pay depend on? In Luxembourg, basically, it depends, and in a lot of countries, basically, it depends on the taxable income and it depends on the tax class. So we'll go through this very quickly. Taxable income, what is it? So on one hand, you have all your income, salaries, rental income, stocks you have sold or whatever. Then you have different special expenses. We are coming to this in the third part when we are talking about tax optimization. So we have different possibilities of deductions on the tax return. You will have what is called the taxable income, and from that taxable income there are different allowances that will be withdrawn to finally get the adjusted taxable income. So when we are talking tax optimization, there are basically three ways to lower down your taxes here in Luxembourg. First is to ask your employer to decrease your salary, which is basically not the best idea. Better idea would be to increase your special expenses to a higher level, so you can deduct more, or to increase your allowances. So basically, we are coming to this more in detail later. So taxable income is one important criteria to determine how much taxes you have to pay. Tax class is the other. To keep it very simple, there are three tax classes in Luxembourg. Tax class 1 is basically for singles. Tax class 1A is mainly for singles with kids. And tax class 2 is for married couples, but also couples in a registered partnership, a taxx called here in Luxembourg. But there's one difference between marriage and partnership here. Being married 31st of December allows you to have tax class 2 for the entire year you got married. Being in a partnership, signing a partnership on the 31st of December, for example, only allows you to ask for tax class 2 in the year after. So in order to have to claim tax class 2 in a registered partnership, you have to be in this partnership from the 1st of January until the 31st of December. So if you are getting in a partnership or getting out of a partnership during the year, that year you cannot ask for tax class 2. Tax rates in Luxembourg, how are they determined? So basically in Luxembourg, we have a progressive tax rate system going from 0% taxation to 42. So 42% is the highest tax rate we have. And on top of that, there is some surcharge. So on top of the taxes that is calculated based on those tax rates, there is what is called an unemployment fund surcharge. So basically, it's the money everyone that is paying taxes in Luxembourg has to add into those funds, and that fund serves if one day you would be unemployed, and the Luxembourg state would give you some unemployment money. This rate normally, so on top of normal taxation, is 7% for if you are tax class 1 with a taxable income of less than 150k, 300 less than 300k tax class 2, and above those amounts it will be 9% that will apply. So as an example, the marginal tax rate for a single with 50k taxable income in Luxembourg is 39% for the taxation itself, plus the 7% unemployment fund. So at the end, the final tax rate on the last euros this person is earning is 41.73 euros. We will see in an example that those 41.73 are not applied to the entire taxable income, but because we have tax brackets and the progressive tax rate. For example, here you see the same example, 50k taxable income, tax class 1, so a single. On the first 11,265 euros this person is earning, he does not pay any taxes at all, so 0%. On the next 1,872 euros, he's taxed at 8%. Equals 150 euros on that bracket. Then on the next, he's taxed at 9%, and so on. And above 45,897 thousand euros until 50,000 euros, he will be taxed at 39% plus the unemployment charge. And then we have a marginal tax rate of 41.73. And the average, because we have a progressive tax rate, the average taxes this person pays is 19.49%. So it's not, if anyone is telling you in Luxembourg we are paying 42% of taxes, it's quite impossible. But it's not impossible, but you have to have a taxable income of more than 1 million per year or something. Then, yeah, you could be near an average tax rate of almost 40% or 42%. But the marginal tax rate here, so the last tax bracket you are in with your salary, is important when we are talking about tax optimization later, because basically when we are talking tax optimization and deductions, a deduction allows you to lower down the last euro you are earning, and that's why the marginal tax rate is so important to understand why a deduction, for example, of 1,000 euros for this guy would mean that he could save 417 euros in taxes. We're coming to this later. Tax class 2, a lot of you asked us questions at the registration about tax class 2 and 15% tax cut for the spouse and everything. We are giving a few examples, but basically what happens with tax class 2? Tax class 2 means that when you're doing your tax return together, as a married couple, for example, all your income will be put in one pot, will be splitted by 2, and every half will be taxed like in tax class 1. And then the result of this taxation will be put together, and that's the tax you have to pay as a married couple. We will see a few examples that normally it's more interesting to do a jointly tax return and being in tax class 2 than separately in two tax classes, tax class 1. And one other specificity of being married or being in a registered partnership, if both of the partners are working, are getting a salary, there's a special allowances of 4,500 euros. So your total taxable income in your household there will be 4,500 euros that will be lowered down on that taxable income, which helps also to save on taxes when you're in tax class 2 and if both of you are working. So a few examples. On the left, you see a couple that is not married, not in a partnership. One of that couple is working, the other one not. So one has an income of, here in the example, of 100k, the other 0. So only person 1 will be taxed in tax class 1 and would have to pay a little bit more than 30,000 euros. If the same couple would be married or for an entire year in a partnership, in a registered partnership, the income would be the same, 100,000 euros. There's no, those 4,500 we just talked about won't be deducted because the other one is not working. So the taxable income remains 100,000 euros, but with tax class 2, the taxes they have to pay is only 19,487. So at the end, doing a tax return together where one spouse is not working compared to doing it separately as a single, here in this example, they could save 11,121 euros in taxes. Quite a big amount. However, if you are taking same situation, but here the spouse is also getting a salary. On the left, the example of the same couple, not married, not in a partnership, one earning 100K, the other 40K. Both will be taxed at tax class 1, only on their salary. So the one on the 100K, the other one on the 40K. Person 1 pays, as we have seen a minute ago, 13,608 euros on taxes. The second person 2 will pay 5,700. So in total, they would have to pay 36,400 and a few. Here you see also the progressivity of the tax brackets here in Luxembourg. The person 1 is earning a little bit more. Is 115. Is earning 150% more, but taxation is 6 times higher, because basically the rule or the system in Luxembourg says that the more you earn, the more you can pay on taxes. The less you earn, the less you will pay on taxes. So this is for the couple not being married, not in a partnership. Let's take the same couple but getting married or in a registered partnership during an entire year with the same income. So what will be the taxable income? So there will be the 100K from person 1, the 40K from person 2, minus the 4,500 allowances because both are working. So the taxable income will be 135,500. That taxable income will be taxed with tax class 2. And at the end, they would have to pay 34,302 euros in taxes. Tax savings only by marriage or by partnership, 2,169 euros for this couple. To give you an idea, the difference between the gain you could have being married is higher if there's a huge difference in salaries between both, and if the salary is a little bit lower. The higher the salary is, and the more they are on the same level, the less the difference is big. And then one question that, I don't know, 20% of the people that registered were asking about is this the second tax card of 15%. So basically, what happens in Luxembourg when you are married, this is not the case for people in a registered partnership. Being in a registered partnership on your monthly salary is like being single. So both of you would be considered as a single tax class 1. And at the end of the year, you are doing the tax return together and you are claiming for tax class 2. That's for the partnership. For married couples in Luxembourg, because our tax system is very old, I don't know, from the 50s, and in the 50s, men went at work and our wives stood at home, kids and kitchen and everything. That was in the 50s. Today, it's different, but the tax system has not evolved. So basically what happens is normally the man in the couple got the first tax class, that's the standard, and his monthly salary will be taxed in tax class 2. What is the impact after marriage? But for the man, the monthly net salary will increase, because before he got taxed at tax class 1, being a single. Now his monthly salary will be taxed in tax class 2. So his monthly salary will increase. The spouse, if he or she is working, then there will be a flat rate taxation on that income, and that tax rate is 15%. So there's one of the two that will be taxed each month with 15%. So normally that income, that net salary will also increase. But I have bad news, and a lot of you have noticed it already over the last years. At the end of especially the first year, we're coming to that, you owe taxes to the government. Why? If you are taking the same example here, so the married couple with 100K plus the second person with 40K, they owe over an entire year 34,000 euros in taxes. But on the tax, the withholding tax on their salaries was not high enough, because basically the second person was only taxed with 15%, which was not enough. But both of them have not been taxed enough, and so the withholding tax was only 25,000 500 more or less. Taxes due was 34,000, so there's like 8,800 euros missing. Those 8,800 euros missing, Luxembourg state will come to you and will ask you to pay it. And this is very often the case for people getting married during the year. So the first year they are doing the tax return together, or the first year they are coming to Luxembourg, being married, and they don't know about it. And at the end of the year, they have a bad surprise because they owe a lot of taxes, and they're like, what just happened? They told me being married is the best possible way to save on taxes in Luxembourg. It is. We have seen it before compared to two singles. However, because the withholded tax was not high enough, you owe taxes the first year. What happens then? You will receive in the same letter where tax administration is asking you to pay the 8,800 euros, they will ask you to pay now advances. Those advances have to be paid each quarter. So in this example, they will ask you to pay each quarter 2,200 euros of advances to avoid that at the end of the year you owe them 8,800. So the first year you have this bad surprise. Then you have the second bad surprise that you have to pay advances now. But the good surprise or the good news at the end of the next year is that normally, if there's no change in your salary, so if your salaries stood the same than the year before, thanks to the advances, you don't owe them money at the end of the year. Okay, that's basically all about this 15% for second tax card for the spouse. As seen in the examples, good news is normally marriage is a good thing, not only for romantic people, but also for people loving to pay less taxes. But yeah, it's psychological. It hurts when you have to pay 8,800 at the end of the year. A couple in a registered partnership, because they are taxed each month, tax class 1, they are paying too much taxes on their salaries each month, and they will get money back at the end of the year. But the taxes they have to pay is exactly the same. Being married on a year for the entire year, it is exactly the same than for married couple. But the system is a little bit different. Married couples very often have to pay money at the end of the year. Couples in a registered partnership will get money back. That's one reason why I'm not married. I hope my wife is not watching. My partner. So I will give over to Justine for some examples of specificities for expats. Also, a lot of questions we had in the registration, and we will try, even if you are not answering all the questions here, because that part is the most complicated one. Yeah. That's why I have Justine with me. If you are not answering all the questions here, we will answer in the FAQs we are sending to everyone next week.
Thank you, Patrick. Hi, everybody. The bad news is that I'm the tax expert, so I will present the most boring part, but I will try to keep it simple and answer the technical question afterwards. So let's try with the most question we received about people who arrived during the tax year in Luxembourg, how it works. What should you do with your income earned before your arrival or after your departure in case you left Luxembourg? So in Luxembourg, as Patrick mentioned, you have first to check if you have a filing obligation or not. Okay, so let's take some example. It will be easier, I guess. So example 1, Mr. X arrived in Luxembourg on April 15th. He is married, the spouse doesn't work, so he's entitled to tax class 2. Before the arrival in Luxembourg, he worked in India, and net employment income was 30,000 euros. During residency period, he earned a Luxembourg net employment income of 150,000 euro, and the couple doesn't earn any other income. So what we saw previously is that he received during residency period in Luxembourg more than 100,000 euro. Okay, so he has a filing obligation. He needs to prepare a whole tax return. Two options here. The question is, does he need to file the tax return including worldwide income earned yearly or only during residency period? So we have two options. We will see that the withholding tax for his employment income is 46,000 euros something. So if option 1, he filed the tax return including yearly income, Okay, so including the income earned in India, the income from India won't be taxable in Luxembourg. It will be reported as exempt income. However, it will be taken into account to determine the final global rate applicable on the Luxembourg source income only. So the final global rate will be 29.34%, and he is entitled to get a tax refund of 2,769 euros. Option 2, the taxpayer said, okay, I'm resident only partly. I don't want to disclose my foreign income. I just file for the residency period. So in that case, if we do the calculation, we see that the income tax due will be lower than the withholding tax. However, the refund in that case is not possible because there is an article in Luxembourg in the law saying that to be entitled to a tax refund, you need to disclose yearly income to adjust it the global rate. So in that case, he can file the tax return, but the withholding tax will be final, no refund possible. Let's take another example. So same situation, same date of arrival. The only difference here is that before the arrival, he works in the UK and the net employment income was higher. So in that case, two options. Option 1, the same. We file for the entire year, but we see here that there is an additional tax due because the income earned in the UK before the residency period in Luxembourg are higher. So what Mr. X can do is to opt for option 2. He will file for the residency period only, reporting income earned during residency period in Luxembourg. As the previous case, the refund won't be possible, but there won't be any additional tax due. So my advice here, if you arrive during party and have a filing obligation, contact us and we do the calculation for you to see what is the most beneficial for you. So let's take another example. So here Mr. X arrived during 2022, still married, same income, just in Luxembourg during residency period, he earned less, so 70,000 euros. So we see that here there is no filing obligation because it's below 100,000 euros. So case 1, he arrived in February. So he have more than 9 months continuously of employment period in Luxembourg. So he can file the wage tax adjustment only disclosing Luxembourg income. So not the income earned before that. And so you can see that he will be entitled to get a refund of 1,006.20 euro. If he arrived, so case 2, 1st of May 2022, it doesn't reach the criteria of 9 months continuously in Luxembourg, so the wage tax adjustment needs to include yearly worldwide income. The same, the Indian income won't be taxable in Luxembourg, but considered to determine the final rate applicable, and as such, there is still a refund here possible. Example 4 now. So Mr. X arrived in Luxembourg in 2022, still tax class 2. He works abroad. So it's mainly here an example, quite same situation, but just to mention that in that case, so the income before the arrival is a bit higher and income earned during residence period are lower. The wage tax adjustment is not beneficial because there is a tax due here. If you have a doubt and doesn't have filing obligation, you can file the wage tax adjustment because if the result is a tax due, then the tax office will just close your file and the withholding tax will be final. So you won't have to pay back this money. The wage tax adjustment is really to regularize the withholding tax if it's in your favor only. So in case of doubt, no filing obligation, just file the form 163. And if there is a payment, the file is closed and you are fine. Another example, because we also receive a lot of questions, what if you arrived in Luxembourg during the year, but before that you didn't work? So, for example, student. So this is the case of Mr. Y. He arrived in September 2022, single, no child, so tax class 1 is applied. He was student in India, and he has a net employment income of 30,000 euro. So he doesn't have filing obligation, he can do a wage tax adjustment, and he will be entitled to get a tax refund around 6,000 euro. But the only thing is that he needs to include a school certificate proving that the evidence that he didn't receive any income before this arrival in Luxembourg. Let's talk a bit about other type of income. So I will start with rental income, then a few words about investment income, RSU, and the last topic, I think a lot of you asked the question about what can you do with support for family members abroad. So our rental income are determined in Luxembourg. So the net rental income will be considered on your tax return. Basically, you take the rent, so monthly rent, minus the loan interest of the mortgage if you have an interest, minus building depreciation, so based on Luxembourgish rule, and minus other deductible expenses that you may have as owner of the building, so some electricity bills or whatever, renovation. If your rental income exceeds 600 euros, you have a filing obligation as Luxembourg tax resident, even if the property is located abroad. However, if the property is located abroad, it's the same as employment income. It won't be taxable here, but considered to determine the global rate applicable on your income. So what is the example, the impact of that? So if you have Mr. X here, who earn, so is single, no child, tax class 1, resident for the entire year in Luxembourg, and he has net employment income 130,000 K. He has a property located in Luxembourg which is rented out. So the rent is 20,000 euro minus loan interest 1,000 euro minus building depreciation 2,000 euro minus the other expenses. So we reach the total net income 16,500 euros. Sorry. So we can see on the table the differences if, in case it doesn't have any rental income versus with rental income for a property located in Luxembourg. So it results to an additional tax due of 7,000 euros, almost. So if we take exactly the same number, but with a property located outside of Luxembourg, for example, in the UK, you will see that the rental income have an impact only to determine the global rate. And then the taxable basis, taxable income is lower because we will only apply the global rate on the taxable income in Luxembourg, so on the employment income. So here you have the example 2 with the property located outside of Luxembourg. So the income tax due is 44,000 euros. In this previous example, it was like 50,000 euros. So there is a difference of 5,000 and something euro. So here, those examples show you that the differences between the rental income have an impact, but it's not really taxed here in Luxembourg for property located abroad. Investment income from abroad. So as Luxembourg resident, you need to declare your worldwide income on the tax return. So dividend and interest will be an investment income category. There is a specific exemption for dividend, 50% tax exempt. So you will only report 50%. And for dividend and interest, you have a general exemption of 100-500 euro per year. This exemption is doubled in case of joint taxation. And about capital gain, so if you have some stocks or crypto, if you hold the shares for more than six months, so it will be qualified as long-term capital gain. There is no taxation in Luxembourg, no need to declare those one. However, if the holding period is less than 6 months, the capital gain, if the capital gain is above 500 euros, it's taxable in Luxembourg. You can compensate the loss if you have some losses on the gains, capital gain, but this loss cannot be compensated other type of income, and it's only for the tax year. A few words about RSU, because we also received a question, what if I receive RSU from a former employer or from abroad? If it's not included on the Luxembourg payroll, then it means that it was not subject to withholding tax in Luxembourg. If the amount is above 600 euros, you have a filing obligation and you need to report those income as an exempted income. And last topic for my side today, support for family members abroad. So in case you have dependents or your parents located abroad and you send them money on a monthly basis or during the year, you can deduct an amount. However, it really depends on your situation, because so it depends on your income and family situation, if you have children and your tax class and so on. You have here some example. Why this is important, because the Luxembourg law said that depending on income and family situation, you are able to bear a certain cost at your own charge. You can support and absorb an amount, and only the amount above this normal charge can be deducted as extraordinary charges on your tax return. So let's take those three situations: a couple with kids. For all the situation, the total income is 150,000 euros and family support 12,000 euros. Okay, so the first situation, couple with two kids. The normal charge, the minimum correspond to the normal charge. So he can absorb 7,500 euros. So the deduction will be only the difference between 12,000 and this minimum. So he can deduct 4,500. Sorry, and it will result to a tax gain of 1,876 euros. Single without kid, the minimum of the normal charge is 50,000 euros, so he cannot deduct anything, and there is no tax gain. So the support will be at his own charge. And then a couple with 5 kids, there is no minimum, so all the participation provided can be deducted, and the tax gain will be 5,004 euros. So I hope that was clear and not too boring. And I give you back the floor, Patrick. Thank you.
Thank you. Thank you, Justine. So there's one good thing about the Luxembourg tax return. It's possible to save on taxes. And so that's my favorite part of any webinar. So let's see if there's anything on the menu for all of you. So the first question that we have to answer is what amount of taxes can I save with tax optimization? We'll give you a few examples. So if you are looking at an adjusted taxable income of 50K, but this person would pay without any optimization, so without any deduction on the tax return, 9,743 euros in taxes. If that person would deduct 4,000 euros, the taxable income would only be 46K. And at that moment, as we have seen in our table before, the last tax bracket is shorter, because the one with that is taxed at 39% plus the 7% unemployment charge, it's only from 45,897 to 46K. And so in total, this person, by deducting 4,000 euros from the taxable income, would only have to pay 8,074 euros in taxes. And the tax gain here, so by the deduction of 4K, would be 1,669 euros. A few other examples. Here is a single with a gross monthly salary of 3K. He has some insurances, most commonly a car, we're coming to that, a home savings plan, we're coming to that as well. And he has maybe a cleaning company for his home and is paying 1,000 euros a year. But with by deducting all those expenses on the tax return, he could claim back 475 euros in taxes. A couple with 2 children, with one earning 5K per month, the other one 3K per month. If that couple would go for every possible optimization, so every possible deduction in their personal situation, they could save 7,474 euros in taxes. We are coming to different deductions right now. So what is tax optimization? I think you have understood how it works. You have to deduct different expenses on the tax return, and by deducting those expenses on the tax return, it lowers down your taxable income, and automatically you are paying less taxes. And if the withholded tax on your monthly salary was higher than the amount you have to pay for the entire year, Luxembourg tax administration will reimburse you the difference. Few examples. We were talking about marginal tax rates. For example, a single with a gross monthly salary of 3K, he's at a marginal tax rate of 26%. Someone earning 5K is already at 42%, meaning that a person that earns, for example, 10K, last line, he's at the marginal tax rate of 43%, meaning that if this person is deducting 1,000 euros from on the tax return, the tax gain will be 430 euros. So it's always the percent, the marginal tax rate applied on your deduction that tells you how much taxes you could save by deducting those expenses. What options do you have? But basically, at the beginning, I was talking about special expenses and allowances. So special expenses, it's just the name of that category on the tax return, but there you can find the interests you are paying on loans, the insurance premiums you are paying for car insurance, for example. You have private pension premiums or contributions to a home savings plan. And on the allowances side, you have cost of childcare and domestic help. We are seeing all those different categories more in detail now. And you have the extraordinary expenses. That is what Justin just talked about. Could be money that you are sending to your families in India, for example. But there's some criteria, some minimum. So I won't go into details now because Justin already explained how it works. If you are not sure if you are sending money to your family in India and you are not sure if you are where you are situated on that normal charge, or you do your tax return on taxx, then you see the amount during the process, or you're just contacting us, giving us more feedback about your family situation and income, and we can calculate the minimum charge you have. And everything above can be deductible if tax administration is accepting it. So best as well with money you are sending to your family, to your parents, for example, in India, it's always good. One, you have to provide the bank statements of the transaction, and best would be to add some letter explaining why you are sending this money to your parents, because I don't know, maybe they have no pension or the pension is not high enough, or give some arguments. So you have to convince them that they will accept it. So let's see in detail different possible deductions. So first category of the special expenses is the interest and insurance premiums. Here we are not talking about interest on mortgages. We're coming to this in a minute. Here it's interest on personal loans, for example. For every category of deduction on the tax return, there are maximum deductible limits. You cannot go over those maximum deductible limits. Those are depending on your mostly on your family situation. So how many members are living in your family, and sometimes also your age. Here for the insurances and the interests on personal loans, it's 672 euros per family member in your household. So if you are single, it's 672 maximum deductible limit. If you are a couple with 2 kids, it's 2,688 that you can deduct in this category. What are the different types of deductions possible? So on one hand, you have the interest expenses on loans, personal loans for a car, for example, but also credit card interests. So normally in Luxembourg, when you have a credit card with your bank, there are no interests, except if you cannot pay the bill for the credit card at the end of the month, then there will be some interests applying, and those you can deduct them. And the same for overdraft fees. So if on your bank account you are going into the minus and you have to pay interests, those are also deductible on the tax return. Insurance premiums. So there's not every insurance that is deductible. One good rule to remember is if it covers people, humans, then normally it's deductible. If it covers the damage on your Mercedes, it's not. So the most common deduction here is the civil liability insurance for your car, because that one is mandatory. You need one to register a car in Luxembourg and to drive it. That one is deductible. Then life insurance. If you have a life insurance, I don't know, covering a mortgage or covering your family, that's deductible as well. And medical insurance, so basically private healthcare insurance with DKV, for example. And all those, because I know a lot of expats with their company, they have, for example, private healthcare insurance where the employer is paying for. If the employer is paying it for you, it's not deductible, so it has to be paid by yourself. If you have in your package with your company that company is paying half and you are paying half of that insurance, then you can deduct half, but you need a certificate. There's one insurance that is a little bit more particular for tax returns, it's outstanding balance insurance. And outstanding balance insurance is basically life insurance that covers your mortgage. So if you are buying a home here in Luxembourg and you are subscribing a mortgage, then very often the bank asks you to subscribe an outstanding balance insurance. Basically, that insurance will reimburse your mortgage in case of death or in case of disability. And there, normally the banker or your insurance company, because you don't need to do those with your bank, because very often the quotes at the banks are not so interesting than if you are going straight to an insurance company. So you can subscribe those at your bank, but also with an insurance company. And normally the insurance guy will ask you if you want to pay that insurance per month for the entire duration of the contract, or if you want to pay it one shot. If you are paying it per month or per year, that insurance will be included into the maximum deductible limits together with your car insurance, with your private health insurance, with maybe other life insurances. And very quickly, because the ceiling is 672 euros, very quickly with the car insurance, you are already over that or near that maximum deductible limit. And in that case, there's no benefit of deducting an outstanding balance insurance, because if already with the car and maybe the private healthcare insurance, you are over the maximum, but you don't have any benefits from that outstanding balance insurance because you can no longer deduct it. Second possibility you have, it's the insurance guy will probably tell you about paying all that insurance in one shot. From a tax perspective, that's what I would advise you to do. Of course, in that case, you need some money to pay that, because you have to pay. We'll see an example in a few minutes, but there we are very quickly at 25K for such an insurance. But basically, you are paying it at the beginning of the contract, and then it is paid. And the tax administration, tax law allows you in that case a higher deductible limit for the year you subscribe to that outstanding balance insurance. And that higher limit is calculated by 6,000 euros per person, adult person. So if you are a couple, 12,000, plus 1,200 euros per child, plus 8% for every year over 30 years. So for example, if you are 35 years old, it's 5 times 8% that will be added to that maximum deductible limit. Here an example, and a couple, the father 40 years, mother 38 with 2 kids, they can deduct here a maximum of 24,960 euros. What does this mean? But this means basically if they are deducting this insurance of 20, almost 25K, they would save that year 10,432 euros in taxes. So basically, it's like getting a discount on that insurance of 42%. 42 because there's a marginal tax rate for this example. So at the end, this insurance, this family would have to pay almost 25K for that insurance. Thanks to the tax gain, Luxembourg state would reimburse 10,400 and a few. So at the end, this insurance would only cost 14,528 euros. And also one thing that is good to know, and that not a lot of people know about it, and tax administration obviously don't talk about it neither. This maximum ceiling can be claimed every 5 years. I'll give you an example. You bought your house, 2015. You bought a house in Luxembourg. You already covered part of your mortgage with an outstanding balance insurance. Maybe today you are doing some construction in that house, some extending or whatever. You have a new mortgage. Then you can ask again you can subscribe again an outstanding balance insurance for that new mortgage, and you can again profit from this higher maximum deductible limit. So it's every 5 years you can claim it. Another example is you are buying a house. You bought a house 6 years ago. You covered only part of the mortgage because the insurance premium was too high. Now 5 years later, you can subscribe a new outstanding balance insurance for the rest of the mortgage, and you can again get a higher maximum deductible limit. No. Even it can also be in France. It has to be your main residency. It cannot be a house you are buying on the Italian Riviera for some holidays. It has to be in your main residency, but it can also be in behind the border in Germany, France, or Belgium. But there, we talked about it this afternoon. I'm not sure that French insurance companies, for example, having this option to pay in one shot those insurances is a very Luxembourgish thing, because it's deductible on tax return. That's why insurance companies in Luxembourg are providing this possibility to pay it in one shot. So the question here is, do I have the 25K to pay that insurance in one shot? Then I have a big tax benefit. And if not, some banks are offering, it was the case for me when I bought my house 10 years ago, maybe now they changed it, but some banks are offering the possibility to give you a little bit more of a mortgage, 25K more, and you can pay that insurance with that mortgage. But not sure if the banks, after everything that's happening on the real estate market over the last 12 months, is still on with that. There you have to talk with your bank. And good advice as well. We are working, one of our partners is At Home Finance. At Home Finance is the leading mortgage broker here in Luxembourg, and they're working with quite all the banks here in Luxembourg. So if you have a plan to buy a home in Luxembourg or to invest in some rental property, you can contact me. I will get you in touch with their brokers. And basically what they do, they are taking a look into your family situation, in your income, and they can already give you some idea about how much a bank in Luxembourg would give you. This gives you already an idea about what is the price I can look for if I want to buy an apartment, for example, or a house. And their service is for free, so it does not cost you anything. And they're going to all the banks and checking for the best offer for your personal situation. Then second possibility of deduction is the private pension plan. Probably a lot of you have private pension plans already with their employer. In Luxembourg, we have three called pillars of our pension system. We have the public pension. No one has a choice. Everyone that is working is contributing 8% into the private pension plan. Basically, you are, from your salary, there's 8%. Your employer is adding 8%, and the state is again adding 8%. So in total, 24% of your gross salary will be invested into that pension fund. So you can get a pension at pension age. That's the first pillar. Then the second pillar, it's the one your company maybe provided you with. It's called Régime Complémentaire de Pension. It's a corporate pension plan. Every employer is free to open up such a plan for their employees. If your company has opened up such a plan for you, you can add an extra 100 euros per month into that plan. That is also deductible. So if, for example, you are earning, you are single earning 50K, if you're adding each month 100 euros into that corporate pension plan, you are saving each month 42 euros of taxes. And the third pillar, it's the private pension plan, and that's basically everyone here in Luxembourg is free to subscribe to those, and there you can deduct a maximum of 3,200 euros per adult person in your household. So here the kids are not involved. So, for example, a couple with two kids, they can deduct 2 times 3,200, so a total of 6,400 euros. If they're having a taxable income of 100K, they could save 2,670 euros in taxes each year. One particular point for this deduction is for insurances and home savings, there's one maximum deductible limit, and it's not important who has on whose name is the contract. If, for example, all our insurances in my family are on my name, then I can deduct them and until the maximum deductible limit for my family. Here it's 3,200 individually for the husband and 3,200 for the wife. The husband, for example, could not say, I will take over the 6,400 and so I will have some good savings at age 60 when I'm at pension age, and my wife has nothing. So it's very personally 3,100 maximum per adult person. Some rules are applying. One is that maturity is at earliest at age 60. So at earliest at age 60, you can access that money. It will be blocked until then. You cannot withdraw it. And minimum 10 years. Meaning, for example, if you are subscribing at age 55, you can only access the money at 65. If you are 40 now, you have to wait until 60. So it's earliest 60, and minimum 10 years. If you leave Luxembourg, and that's a question a lot of expats are asking me, if you leave Luxembourg and I don't know, go work somewhere else, UK, India, whatever. At that moment, what you can do is just stop your monthly investments into that plan without any penalty. But the money you have invested up to that moment will remain invested into those funds. We're coming to this, into those funds. And at age 60, wherever you are living in the world at that moment, you can withdraw the money from the contract. If something would happen to you, it goes to the person you assign in the contract. If there are kids, most people are mentioning the kids. So at the moment of your death, your children would receive the money that is on the account at that moment. Normally, well, not normally, but all the insurance companies in Luxembourg are offering those types of contracts. We are working with Lux. Lux, it's Luxembourg's oldest insurance company, and they have two different options for those pension plans. One is called performance, the other is called security. Security means that the money is not invested on the stock market, but you have a guaranteed amount that you will get at age 60 at the end of the contract. So that guaranteed amount is determined today. So you know exactly what you will receive. The other option is called the performance option, and there the money will be invested on the stock market in different investment funds. So basically, at Lux, you can choose between 11 different funds, and from those 11 funds, you can choose up to 4 different funds. There are different funds, different risk levels, different funds going into bonds, others only in stocks, and so on. And there are quite few good funds in this list. So, for example, my favorite is Uni Nachhaltig Aktien Global that did plus 9.41% on average per year for the last 10 years, even if there was COVID and the Russians and everything. So there you could just choose from a list, invest, and so every month, because normally pension plans you are investing each month the amount you want to invest. Each month the money will be invested into those funds. If you're choosing one, it will go 100% in that fund. If you're choosing 4, you can all put 25% in each, or 50% in one and 20 in the other, and you can distribute your the investment as you wish. And also good news, because now we are the November 24th for this type of investment. Because now we are at the end of the year, you could open such a contract now with a start date on the 1st of January 2023. At that time, you would have to invest the 12 months for 2023 now in December, pay it in one shot, and starting from January next year, it will be monthly investments. So if you would open up such a contract for, let's say, 100 euros a month, you would have to pay now the 1,200. You can deduct the 1,200. And next year, starting from January, it will be 100 euros per month. So minimum for those contracts is 50 euros per month. Maximum is 266.66, because times 12 equals the 3,200. If you have questions about this, you can also contact us, and we can help you with setting up those contracts. Other possibility, it's the home savings plan. Home savings plan, it's kind of a savings account. It's kind of a savings account where your money will be blocked for 10 years, and after 10 years you can access that money on that savings account, but you have to use it for your home. So you have to use it for buying a home, for renovating. If you're a homeowner, you can use it for renovating your heating system, windows, painting, whatever, but it has to be related to the house. Or you can also use it to pay back on your mortgage. So if you have a mortgage running in 10 years, you can just take the money and put it there. How much can you deduct? But the maximum deductible limit depends on the numbers of persons in your household, but also the age of the parents. So if one of the parents, one is enough, if one of the parents is younger than 41 years, the maximum deductible limit will be doubled. Meaning that here in this example, father 40, mother 38 with 2 kids, they can deduct 4 times 672 times 2, because they're younger than 41 years. So they could deduct 5,376 euros per year. Tax savings with a taxable income of 100K would be 2,243 euros. What would they receive after 10 years? But if they are paying 5,376 euros each year, they will get more or less. Interest rates are not great on those products. They are around 1%, but it's more for the tax savings that the people are subscribing to home savings plans. But after 10 years, this family could get around 54,000 euros, basically all the money they've invested. And out of those 54,000 euros, the Luxembourg state offered you 22,430. So basically the tax savings per year times 10, because Luxembourg state made you save on taxes for 2,243 euros each year. So it's like a savings account where the Luxembourg state is offering you 42% of the money you are investing. If anyone has a better idea of a sure investment to get this return on invest, tell me. And then mortgage. We talked about the interest on personal loans for your car, for example, that are together in the same category than the insurances. A mortgage is a part, and there are basically 2 main rules. First is if your building or your house is in construction, there's no maximum deductible limit on the interest you can deduct. So as long as you are not living in that house, you can fully deduct your interests. Could be the case for new construction. You bought the ground and you are building the house on it, and it takes like 2 years. But there you can deduct the interest without any cap. Could also be the case if you are buying an existing house and you are doing some work in it, and you are not living in it right after the purchase. Then you can also deduct without any maximum deductible limit the interests. Maybe just for information, the year you are buying a property, you can also deduct the bank fees for the mortgage. So normally banks in Luxembourg are asking 500, 1,000, 2,000 euros just to set up your mortgage. That is deductible. And also the notary fee. But in Luxembourg, there are 2 notary deeds or 2 notary fees that you have to pay, 2 notary invoices. One is for the purchase. What was that? I saw balloons on my screen. One notary invoice is for the acquisition itself. So normally it's around 7-8% of the building of the house you are buying. That one is not deductible, but you can claim a tax credit for that one, but it's not deductible on tax return. The second invoice from the notary is for the mortgage opening. When you're opening up a mortgage, the notary has to register that mortgage, and normally that costs you 2,000, 3,000 euros, and that one will be deductible on the tax return. After moving in, there are maximum deductible limits, and those maximum deductible limits depend on for how long are you living in that building. For example, the first 5 years, and that was the case until tax year 2022, it was 2,000 euros per household members that you could deduct for interests. Starting from tax year 2023, government, because of the interest rates that were exploding, they were increasing this maximum deductible limits. So now you can, starting from this year, from 2023, you can deduct up to 3,000 euros per household member for the first 5 years you're living in that home. For the next 5 years, you can deduct, but before it was 1,500 euros per household member. Now it's 2,250. And after 10 years, it was 1,000 euros per household member, and now it's 1,500. And I think there's a new government in Luxembourg, as you may know, and they already gave some information that normally they will continue to increase those maximum deductible limits because of the interest rates that are very high, and that people are suffering with the real estate prices in Luxembourg. A small increase in interest rates has a big impact on what you have to pay each month. So, for example, a couple moving in 2022, on the 2022 tax return, they can deduct up to 8,000 euros of interests, and with a taxable income of 100k, that would be a tax saving of 3,336 euros. Starting from next year, they could deduct 4 times 3,000 euros, so 12,000 euros, and could save 42% of the 12,000. Then cleaning and childcare expenses. Mainly in Luxembourg, you can deduct, by this category, you can deduct 2 types of expenses. One is for cleaning. So if you hired someone that is cleaning your home, so you have to register this person at CCSS, and you are paying a salary, and CCSS is sending you at the end of the year a paper that you can add to your tax return and deduct those fees. But you can also ask a cleaning company to do that work for you. So you are not the employer, but you are just they're invoicing their services, and that cleaning company you can also ask for certificate or just the invoice, and you can add it to the tax return. That's even possible if, for example, you would I don't know, buy a new apartment, and before moving in you wanted to have cleaned by a company, so a one-shot cleaning, that one is also deductible. So it has not to be a cleaning company coming to you every week. So that's for the cleaning. And in the same category, it's the childcare expenses. So you can deduct the crèche, so the kindergarten, basically, that you have to pay for the kids. That's deductible. And maison relais in Luxembourg, it's where the children are occupied after school, for example. That one, starting from this year, it's free in Luxembourg, so it's no longer deductible. But maybe if you have children and you paid for maison relais, for example, last year, 2022, that one is also can also be deductible here. And the maximum deductible limit here for families is 5,400 euros. So this means a potential tax gain of 2,251 if you are hitting the maximum deductible limit. And in some cases, this ceiling can be exceeded. Basically, this ceiling is linked to the extraordinary expenses ceiling we talked about already, with the charge normal, the normal charge. So there you have to check for your family situation if you can exceed that amount. But most of our users, they are at 5,400. Last category of the tax return, before everyone is sleeping. Preparing the tax return in Luxembourg. So before doing your taxes, the first thing you will need is get together all the certificates, all the papers that you need to do so. Most important is the salary certificate. You don't need the 12 monthly salary payslips, the 12 monthly payslips. You don't need them for your tax return. Basically, your employer he has to send you a document looking like this one. It's the annual declaration of your salary. So it's annually what you got during an entire year, and that is also the same information that your employer is providing to tax administration. So basically, in my personal opinion, I don't understand why taxpayers have to provide this, because tax administration has it already. They have it in their system. It's just I don't know why. But that's the most important. Without that one, you cannot do a tax return. And then, of course, and that's in your interest, get together all the certificates from your possible deductions. For example, insurances. All the insurances here in Luxembourg are providing you with a tax certificate. With a certificate, a paper, normally is a one-page paper, where it's clearly written how much you paid and how much is deductible on the tax return. Don't file a tax return with 20-page contract of your car insurance or whatever. Just ask. Some insurance companies are sending this by paper. Others you have to log into their system and you can download it. But they all, at least in Luxembourg, they all have a standard document that you have to add to your taxes. The same for private pension plans. Any insurance company with whom you have a private pension plan is providing you with a document, a one-page document where they mention how much you paid, how much you invested into that pension plan for the tax year. If you have a corporate pension plan, where you're adding the 100 euros per month, for example, no need of any certificate. You will find that amount, 1,200 euros per year, that you have added on top of what your employer is paying. You find it on your salary certificate. So it's on this one. It's called RCP or LRC. So it's already there, and you don't need to provide any further documentation about this. Home savings plan. So basically in Luxembourg, we have 3 home savings banks. There's Schwäbisch Hall. They are still here for old contracts, but no longer for new ones. There's Wüstenrot and BHW. And they are also sending you normally end of January, the year after the tax year, a document where you see exactly how much you paid, and then you can add this to the tax return. You have also to know that you can not only, for home savings plan, not only deduct what you are investing, but also the interest you have gotten on that home savings plan. A lot of people are missing those. And then interest expenses. So there your banks are providing you with documentation, bank statements on your web banking. Just log into your web banking, normally under documents, you can download the PDF and you have all the information you need for the tax return. Don't send them a contract of your mortgage contract with a table for the next 30 years with all the amounts. Now ask a bank or just log in into your web banking and you will find those documents. I already told you, don't add entire contracts to your tax return. For those who may live not in Luxembourg but in France, Germany, or Belgium, those insurance companies very often don't provide on their own a tax certificate for Luxembourg. But if you are asking them what you need, and if you're living near the Luxembourg border with all the cross-border workers arriving in Luxembourg, they know what they have to provide. Then other certificates. So if we did not talk about donations, if you are giving money for charity, if the total of that money exceeds 120 euros, you can deduct it on tax return, and I think the maximum is 1 million euro per year. So it has to be for NGOs that are recognized by the state. So it has to be some. Sorry, yeah, not every ASPL, but it has to be recognized to be a charity organization. So for Luxembourg, there's like a list. You can find the biggest one is the Red Cross, UNICEF, and all those. But for Luxembourg, there's a list. But normally they're also accepting all donations you are giving to charity organizations here in Europe. But they have to be recognized by the state where they are. So the total, in order to deduct it, the total per year has to be 120 euros. So if you're giving 60 euros to Red Cross and 60 euros to UNICEF, you can deduct it. If you are at 119 euros, just add an extra euro and it's deductible. Then for the crash, most of the public crashes, they are providing you with a certificate automatically at the end of the year. That was the case for my kids, for example. But I know that for private crash, sometimes you have to ask. And ask them, because it's quite a lot of money you pay them, and it's quite a lot of money you can save on taxes. So just ask for a certificate and they have to provide one. Same for Maison Relais. Normally they are sending it automatically. Cleaning person. So if you're hiring someone, you will get automatically paper from CCSS mentioning how much you paid for that cleaning lady. Cleaning company. Some cleaning companies are sending automatically in January a certificate with what you paid during the entire year. Others you have to ask for, and then you ask and they will provide it to you. So finally, you have all the certificates together. Now it's time to get this done. Maybe first information, that's a change that happened this year. Before, the tax deadline was normally the 31st of March. This year, because tax administration had too much work, apparently, they just postponed the deadline to 31st of December. So now they will have a lot of work now in December. But so that's a new deadline. And we are seeing it also on taxx that a lot of people did not file the taxes like the years before, because the years before on our website we had in March a huge peak, and now it's more over the year. And now since some of you have gotten a letter this week, maybe. Now people are coming back and everyone wants to file the taxes until the 31st of December. If a tax return is mandatory in your situation, and we have seen different scenarios, then you can or you have to file it even after the 31st of December, but there may be some penalties you have to pay. If a tax return is not mandatory, but you are just doing one because you want to get some money back thanks to the expenses you have deducted, then every tax return after 31st of December will be refused and you will not get any refund. So how to file the tax return? You can do this, which basically it's the official tax return form here in Luxembourg. It's 20 pages. It's only available in French and in German. And yeah, you have to do some calculations on it. You have to know where to put what. And basically the idea for taxx, so our company came, I was not a tax expert and I'm not a tax expert right now, and that's why I brought Justin. But the idea for taxx came because I was lost with those 20 pages. I was doing my taxes for my family, and I was like, I did 5 years of studying in economics, and you are lost to do this. Isn't there an easier way? At that time, I was a teacher here in Luxembourg, and I came up with the idea. I met the right people, and together we founded taxx. So the idea of taxx at the beginning was, since the beginning was, to avoid this. The final result will always be this, because that's basically the official form that you have to file. But the idea was, okay, how to make this in a more easier and a more convenient way. And then the idea for taxx came up, and we launched the website in 2018. I was still a teacher, and after 2 years it became such a success that I left teaching, and now I'm focusing on this. So a lot less holiday now. And the idea behind it is just to guide you to guide you through the different steps of completing a tax return. I won't show it in detail now because maybe it takes too long, but I have just a short video. It's a 2 minutes video where you see the different steps and how it works. And I hope it works, because videos in PowerPoints always will never work. Hello, my name is Patrick Malje, and I'm one of the founders of taxx.lu. In this video, I will show you how to fill in your tax return without having to be an expert. You can either start a blank return or import the PDF of your last year's return to avoid having to manually copy the data such as your name, social security number, address, or the names of your children. Once in your declaration, you are guided through the different steps. Simply follow the different forms. If you have any questions, you will find the most frequently asked questions on each form, or you can contact our team by chat on the bottom right of this website. We are here to answer all your questions. When you arrive at the auto-scan form, simply download the taxx.lu scanner app to automatically import your Luxembourg tax certificates. Scan the QR code on the page and then scan your certificates. They are automatically imported into your return, and you no longer need to enter them manually. If the system does not recognize your certificate, enter the data on the relevant form. At the end of the process, taxx.lu determines the amount of tax to be paid or reclaimed, and you can download your completed tax return. Then analyze your OptiScore, which shows you at a glance how you can reduce your taxes. Thank you in advance for your trust, and the entire taxx.lu team is at your disposal for any questions regarding your tax return. Yeah, so basically this is what it is. We have one feature since, 2020. You can upload basically all the certificates you got from your bank, insurance companies in Luxembourg, and so on. Luxembourg certificates are recognized automatically. So the system will recognize what is the type of document, and will get the data needed for your tax return, and will include it in the tax return. And at the end, that's for English-speaking people, or who does not speak French or German, of course, the official form that you have to send to tax administration will be in French or in German, because they don't have an English translation. But for an expat, because the entire website is also available in English, it's, in my opinion, the only way to do the taxes on your own if you don't speak the two other official languages here in Luxembourg. And one important thing, so at the end you have the tax return, but you have also an analysis about how you in your situation you could lower down your taxes. So we're calculating based on your income, on your family situation, exactly how much taxes you could save if you would go for a private pension plan and the home savings plan. And if you want to have more information, you can call our team or contact our team. We will call you. We will go through your options, and if you decide to subscribe, we can prepare all those contracts for you. We have all the information we need. We just need a picture of your passport, and then the contract can be set up. No. Okay. What is very quickly our prices? Starting from this year, we have 3 different packages. So our standard price is 50 euros. So that's, you are coming on the website, you are doing your tax return. If you have questions, you are contacting my team by chat. They are answering your questions. And at the end, you are paying 50 euros. You are downloading your official form with the data and you are submitting it. If you want one of our team to check everything in your tax return, so a manual verification of one of our tax experts, it's 80 euros. And if on top of that you want a half an hour video call to discuss your personal situation, then it's 120. That's mostly for people where there's a change in situation, or people arriving in Luxembourg not understanding how is the system working, or people that are marrying or getting kids or buying a house, and they have more specific questions, then they can book this call for 120 euros. And in Luxembourg, we have different additional forms that has to be added, that have to be added to your tax return. If, for example, you have rented income, there's form 190, and those forms, we have them also on the platform, and it's an additional 20 euros on top of the normal price for the tax return. Good news, we agreed with ICAI on a discount for every viewer here of the webinar, every participant. So basically, on the Plus and the Premium package, there's a 15 euros discount that is available. So on the website, you're just choosing, at the end of the process, you are just opting the package you want, and then, like on Amazon, there is a discount field. You're entering the welcome ICAI discount code, and then you have automatically the 15 euros discount. One important information, because I told you already, now our servers, it's not our servers, but servers at AWS are burning because we have a lot of people arriving to file the tax return, and of course the manual verification. The more we are at the end of the year, at some level, we have to cut it down, because we cannot do 2,000 manual verifications for the last 5 years between Christmas and New Year's Eve. So if you want to have the Plus or the Premium, don't lose any time, because we are following this one day after another. And if you have too much demand, we have to shut that package down. But the standard package for 50 euros is still available. As I mentioned, for home savings plans, for life insurance, or for pension plans, it's not too late to do something to optimize your situation in 2023. We can postpone all this. We can put as a start date the 1st of January for most of all those contracts. So even now, in the 5 weeks that are left in 2023, you can get to the maximum deductible limits. If you want to, if you're interested, and if you want to have more information about those different products, just send us an email at help@taxx.lu, and then we will get back in touch and we can discuss your personal situation. That's all for today. 1 hour and a half almost. So I hope it was not too much information. The webinar will remain on the ICAI YouTube channel and LinkedIn channel, so you can always watch it again, send it to friends or whatever. And if you have any question, just get back to us by email or by chat on our platform. And as mentioned at the beginning, we will send kind of an FAQ next week to all the registered audience with most of those questions you asked when you registered on the website. Thank you for your kindness to offer us the opportunity to talk and to prepare this webinar. And I hope for next year we can do this again. Thank you. So just end the stream.